Hello and welcome to the Friday wrap up here on Landy's Crypto Corner. Today's going to be a little bit quicker as we look at Bitcoin because it made a big move in the Thursday candle, but it didn't do a whole lot in terms of structure or volatility. While it was very volatile in that daily candle, in terms of overall volatility on the daily, we didn't actually see the move above the upper second standard deviation to kick off expansion. Now, I do want to say congratulations to everyone that was cheering for and hoping for $100,000 to get hit. We did see that get hit. Today is Friday, of course. Today is 12/6/2024, so December 6th, 2024 here. It's still Friday for me. Bitcoin has opened its Saturday candle. And, we saw that big move after the sell wall kind of came down in lower term timeframes. I do want to kind of show this off a little bit here. Excuse the signals here. I'm going to explain what these are. Actually, in reference to a question I got earlier today from someone in one of the Spaces events I was holding, who's using the indicator as the purple and the red little indications above or below the candles are just visual aids. They're not signals. It's just telling us where the candle closed in reference to the bands. But wanted to note even where we had been talking about this more macro fib level, this 1272 at 103,645. So basically 103 and a half. Depending on your chart here, you can see that this did not get closed above even in lower term timeframes. But when Bitcoin was knocking on the door of $100,000, once that sell wall fell, we saw Bitcoin initiate a nice expansion, our fabled teleportation above overhead resistances, and shot through for a $4,000 pump, hit $104,000 even here on Coinbase Spot. Went sideways, tested this 1272, and then dumped back out nearly down to, it actually got down to $92,000, $92,055. So some exchanges, it did go lower, but here on spot, it was 92K. So let's go back and take a look at this daily, and we'll discuss a few things here. I noted this in one of my posts on X, and that was understanding volatility. And it's pretty interesting because I do know that many of you that have been watching these videos have likely seen the Learn TA with Landy series that I've been doing over there with Deorganized, whose generous host, Peace Love Music, has been entertaining me for a couple of hours every Tuesday as I kind of walk through my methodology of breaking down trend, support and resistance, volatility, and momentum. Well, we're going to be continuing that next week, next Tuesday. And, one of the things that I've talked about a few times there since talking about volatility as it relates to trend and support and resistance is that, we go through these periods of contraction and price action. And in this case, we have the 20 simple moving average, which is the basis band for the Bollinger Band set that I'm using here. By the way, this is a completely free indicator. I did create this one with the help of many, including the caretaker of Eric Crown Crypto fame. He has created quite a few indicators for Eric over there. He allowed me to pilfer some of his code as long as this indicator was free, and it's always going to remain free. And that was the BBWP metric down here and the moving averages that are built into this indicator as well. So if you do want to pick it up, it just needs to be added. It is a private indicator until I put it up publicly. There's a few things I need to change before that does happen. But the indicator can be found in the X profile link, the bit.ly link in my X profile, and then in the description and the video link down below here on YouTube if you're watching this on YouTube. So look, we had contraction here. So the 20 period MA is the basis band, and then we have 1, 2, and 3 standard deviations to the upside and downside. Typically with a Bollinger Band set, you only see the basis, the upper second, and the lower second. It just says upper or lower, or it doesn't say anything. You just have the high band and the low band. That's always a second standard deviation away to the upside or downside of the 20 simple moving average. And of course, the 20 simple moving average is a 20 period look back and on the closing prices. So when you have essentially, what do we got here? This is the just about as compressed as things got coming into the 5th of November. If you're going to look back in time, we had about 20 days of common price closes. We start to see the bands close in on themselves here. So this is called compression or consolidation. This was a consolidation in higher low fashion. We had higher highs up here as well. And then we got expansion. So once we closed above the upper second and third standard deviation, or actually upper second standard deviation, as denoted by the purple dot over price here, that's what this is denoting. Is sometimes it can be difficult to see if price closed above a band or below it or right on it. The purple indication here is telling us that it closed above the upper second standard deviation. If it was below the lower second here, this other teal line down here, it would also be purple. It would just be below the basis and below the lower second. In this case, we saw the, dropping stuff on my desk here. We saw the expansion up. And we even got a closure outside of the upper third standard deviation. So we're above the upper second. We see the purple dot there and the red triangle denoting that, we've hit some extremes here. We've closed outside of the upper third standard deviation. Now, if that had happened when the bands were a little bit more closed, then, we just look for that to likely continue as long as it's closing above the upper second. In this case, it was still closing above the upper second, did push higher to that $93,500 before kind of coming down a little bit. Got two bearish candles in there, did a little bit of sideways consolidation, put in a little bit of a swing high to swing higher low, and then closed that higher low and moved up to the $99,860, that front run of $100,000, and then came back down to the basis band area, losing the upper first here, and then kind of tracked sideways. And we did get a slight closure above the upper first on Wednesday. And, that's where we had talked about, closes above the upper second will kick off expansion. And we need to look at the bands when we come into a compression like this as acting as shorter term time frame resistance. And we need to see daily closes above the upper second. And in this case, even above the upper third would look really good for expansion to the upside. So what's the criteria for continuation to the upside? Now that we still are in higher low territory here on a close and even a swing with these two lows that are in here, we do need to see closes above the upper second, but additional criteria would also be on closes above 101,550 here. We need to see closes for continued expansion come in above 104 now. If we were to see that, that would put Bitcoin's price action, like let's say on the Saturday candle, that would put it above the upper second and upper third, plus breaking the overhead resistance or the last swing high. And we'd be looking for continuation to deeper levels. That's where, I will turn off the more macro band, which, by the way, if we were to initiate expansion from this structure here, I would eventually be looking for price to head up somewhere around the 1414. That doesn't mean it's going to make it there. There are some consolidation fib levels of interest directly overhead here, but 128, 130 is a valid target. You'll see that 125 is also a valid target from some of the local fib pulls, but let's go ahead and hide this real quick here and discuss that. And we'll discuss the downside potential here as well and what to look for on the weekly. What am I doing here? I wanted to hide this. There we go. All right, so let's go ahead and take a fib pull of this consolidation real quick. And this is a more local fib extension area here. You see that Bitcoin has been holding on to this $95,000 1.618, and it has hit and wicked the 1786 up here at 101,800 above there. And above the upper second, where this 1786 and the upper second are lining up, then we can start looking to that 104 and above to the 1888 on initial expansion, even in lower term timeframes, 105 to 106, fair game. Above there, I would look between the 1888 and the 2 spot. 106 to 108, 108 to 110, 110 to 112. I would call the two spot somewhere around 110 to 112. Then when we start seeing further expansion up, that's when I would start to identify this 272 and that more macro 1414. And that's where we had the $128,000 level. All right. And you can even see that above there, if you're to take the more macro, which is the bear market fib pull extension at the 1414, we've got the 272 of this more local extension. And then just above it, we have the 2414. So between the 1414 on the macro and the 2414 here on the more local from the accumulation, then we'd be looking, somewhere around 128 to 130. You could even say 128 to 132. These aren't going to be exact. I prefer to watch price as it relates to the bands and the areas of interest overhead for volatility levels on longer term timeframes. So let's get the downside out of the way here. If Bitcoin were to drop 92 and a half or 92, you can see that there is. Let's go ahead and get rid of this fib real quick here. So you can see that this essentially lines up with this low on a close. We'll just make this yellow. So if we were to drop this area on a close, we would also be dropping this close open structure. And in fact, we might as well use a horizontal because there is some confluent stuff to the left. So when looking here, we can see, there, it's fun, it's teal. Drop this area, and then we're kind of playing in the high side of this structure over here. So below 92, and especially dropping 90,682, then I would be looking at, of course, that's right around the top side of these candles where all these wicks are coming in. So this would be a bearish reclaim of an area that was flipped from resistance into support. So, I would keep an eye on this low right here at around 88,700, and then the closes down here at 87,300 to 400, and this $85,000 wick low of the first big bear candle after the expansion here. So if that area was lost, obviously that would be a big correction from, the high at 104 down to 85. We're looking at nearly a 20% correction just even to get there. And then any further than that, we're looking at a major correction over 20%, right? So it's about 19% there. But yeah, that would look, not so great for the bulls, because that would also drop the lower second standard deviation, initiating expansion into this area and possibly lower for a retest of the breakout. That's where I would start entertaining, anywhere below 85, 80 to 85, and then upper 70s to $80,000 as the primary zones in for a retest of the structure back here. Now I'm going to be honest, that's not the first thing I'm looking for from here. This is a nice consolidation sideways and up, and realistically a close below $92,000 would be the major failure and the first thing that I would look for as a bear. And bulls would have to be very cautious. But as it stands right now, up and to the right's the name of the game, especially being above the basis. Nice close above the upper first. Need to see upper second, and yesterday's high reclaimed in lower term timeframes at 102, 104. And he closes above there. We start looking at 104, 105, or 104 to 106 at some of the fib levels. And then I would still take it like 2K at a time. I don't think we're going to see too many walls in that area, but, we got a beautiful washout to both sides. We had shorts washed, we had longs washed, and Thursday's candle was a beautiful, beautiful, nice, volatile day. And I do want to point out, it was not oh my God, we need to be so shocked. When we started to see the failure right at that fib level, this was the macro 1272 right in here, and then we saw the big expansion up into it, and then sideways we got the compression, and we got an expansion, right? And but the expansion, has two criteria to meet. So I got a few questions okay, well, we got the expansion confirmed above the upper second standard deviation, right? It's well, you don't just take the Bollinger Band expansion. That's just one piece. That's volatility. We got to pay attention to trend and support and resistance. And, the area to pay attention to is if we were on expansion past the high at 104, which we did not get expansion past that area. And in this case, we had, this area to the left as the primary resistance. Takes closes, whatever you want. We were just right in the resistance zone, got expansion into it, and then boom, down. This was your warning as soon as this higher low back here was dropped. So we had higher low, higher high, potential trend reversal in here, but it did not play out that way. This first big red candle down was your warning shot as it dropped both of these lows. So the next logical area was to look to this low and lower, down into structure here, and then this consolidation and possibly lower. And it did all of those things to the possibly lower side of things. So this was giving us our warning. It got expansion on the next candle, and it dropped this low and got expansion at the same time. That was the signal that this is going to head down on expansion. So that was our little retracement there. And then same for this, nice big consolidation. You can use volume metrics as well. Like look at the volume that came in at the highs. We had this higher volume candle was dropped right on this candle on expansion while it lost this low and lost this candle, this higher volume candle right here. And then boom, tried to regain all those areas, rejected this low, and then boom, down. So, and then we saw a little bit more volume come in on this candle. This is a nice buyback, by the way. Things go sideways. We start to get some real sideways structure. Nothing was really breaking in here that was important. We had this low back here that did not break. We even had a consolidation that kind of protected downside longers in this area. We got the higher low on expansion. I'm sorry, the higher high. We kept pushing higher, got a little nice swing higher low, swing lower high to swing higher low, and then boom up right there at the 100,000. What was this? $107,000. So, or 100,700. Sorry. Now, of course, it pushed a little bit higher here, but this was telling us that this was going to keep expanding, and being above the basis was positive. It held this area as support over here on this low. And then, of course, we saw that it kind of failed on its way back down here, testing below $100,000 into the $99,000 area. So lower term timeframes were warning us. And the warning was pretty clear on some medium term timeframes as well, as we were seeing some extremes being hit. Nice bearish divergence here as well. Just one drive, boom, down. Nice volatile day. This was kind of to be expected. The nice push up, getting an equal reaction to the push with a push down. So cool stuff. I was all for the volatility. As you know, I'm a volatility trader, so I love this stuff. All right, so let's go ahead and talk about potential trend line regression stuff. We've talked about this a few times. There's the two areas that I pointed out for trendline regression on the daily. Now this is a regular Stochs, so this is not a Stochs RSI. We do see that there is a little bit of a drop here between the two zones. Doesn't really matter. What we're looking for is this bullish control zone down here on closes above 99,150. This will turn and cross right back to the upside. Just beware that it, we don't find resistance around this area. And the reason why you can use trendline regression on a regular Stochs is because it's measuring close over close price momentum, not the velocity of RSI. All right, let's go look at RSI, by the way. And this is where we saw that hidden bull div play out. We are above the moving average for RSI, but that doesn't mean too much in this area. I will tell you that, this is kind of nuts, right? I mentioned this, that, there was no high put in here, but if you look at this spike up, in price action all through here, it was right off that continuation drive of bullish divergence, otherwise known as a hidden bull div. And, no matter what, this is going to start throwing like some serious bearish divergence. There already was one drive here that doesn't populate, and then there was another drive between this area and the last high, which was this lower high. But the higher high and this high side structure already throwing bearish divergence. Not a clean one. This wasn't a closing high. It was a swing high. So it's not populating on this particular indicator. But just be cognizant that as we see higher highs come in on closes, and even some potentially range highs that don't close on higher highs, well, it is going to be a closing higher high no matter what now, from yesterday's candle. So just be aware of bearish divergence on the other side of this. That either keeps things in range or provides for a larger correction over time. We can only get that regular bearish divergence in most cases on higher highs in trend. But there is, a little bit of a correction in RSI here, but it's still in the bullish control zone. If it does lose it, what does that look like? Edge of the bullish control zone is 98.101. So need to see closes above there to stay in the bullish control zone. Let's just see. Test down to 99.265 here is where the SMA is. This 12-period moving average on here. You don't need to have one. It's just a confluent kind of crossover that I look for with all of the other data that I preach about. Let's go ahead and look at the weekly. Where do we want to see the weekly close? Well, it's going to be 98,735 because we did see on this weekly that we got the move back above it because we opened below the upper second here on the weekly as noted on Monday. And intra week, if you pass a band, you will see it stretch out a little bit. So I think this was 98.5, maybe a little bit lower than the $98,000 levels, but 98,730 to 98.8 is the area that I'd like to see closed above on the weekly. Would be even nicer if we see a close above 99,860, which was the last high on the weekly. And then, we can start looking to that upper third. Again, 112, that lines up with that 2-spot extension pull from fib pull from the range. So it's right around there. That 2-spot extension is 111. It's about $1,000 higher at the upper third. But, expansion looks good. 82 over 68. So looks good. And believe it or not, this is still in an expansive posture and still bullish in that expansive posture for volatility above the upper first. And that is at 84,500, likely going to update to, 85.5, 86.5 or so, probably another $1,000 leg up in the upper first by Sunday if Bitcoin closes here or higher. Keep in mind that the last higher low is all the way back here at 58.8. The last closing higher low of that candle structure is at 62.8. So 58.8 to 62.8 is the last higher low. Where we are in higher high, higher low structure, this would be higher highs. And what would we look for full trend to hit? Another higher low. Wherever this high comes in on the weekly, we're looking for at minimum another swing higher low, but preferably a closing higher low, which would beget, a correction that would occur on the weekly and under time frames, maybe even bleeding over into the weekly. Weekly looks good on Stoke on closes above $96,000 or so, $95,800 to $96,000. There is no current in trend bearish divergence. We will see bearish divergence form from this high over here. I will tell you that more likely than not. I'd be very shocked if we saw like an 88 read on the weekly, but that could happen. We've seen this thing get maxed out. So looks good. Good distance from the band, from the moving average. When looking at BBWP, this is full on expansion. So expect and high volatility environment. So expect continuation of volatility at minimum to the upside. Now, if we start seeing things close below the upper first at that 84.5, likely going to be 85 to 86.5 next week, then we're looking for this to start cooling down a little bit and initiate some compression. But when you start getting out to like the 2-week, this is only just beginning. Same with the 3-week. This is just beginning in terms of expansion. I will note that the bands are likely going to act as resistances in the lower term timeframes again upper third is at 111. That lines up perfectly with that 2-spot extension. We've got 104, 104.663 at the upper third on the 2-week. Where's the 4-week at? 4-week is at $118,000. It's going to look pretty close to the monthly here, which is right around $120,000. If I'm not mistaken, it's 118. So likely that updates to like 120 to 125 if Bitcoin continues up through some of those levels, especially closes above, on the weekly coming into the end of the month. If it were to close above 104 to 106, we're probably going to see this upper third stretch out mid-month. Otherwise, we look for the update from the December candle into January's candle. And then we'd look for this to update to some of those deeper levels, 120 and above. It's pretty aggressive right now. It hasn't hit full expansion. And I do want to warn, and I'll keep talking about this. I want to warn that we got expansion already. The band's past price, and we're headed back up towards them. That's usually a bearish setup, but there is a counterpoint to that, is that you could see price walk the bands up for quite a while. Whereas in prior cycles, we've seen Bitcoin close outside of the upper third. Just note that when bands expand past price on any corrections, we usually hit those upper bands and reject. This is true of not just Bitcoin, but any kind of asset or indice. And this is something to be aware of. Now, what I will say is the setup in timeframes above the monthly look very, very bullish in comparison to this kind of cautionary look on the monthly here for Bitcoin. But it does need to be called out. I will explain way more about it towards the end of the month as we come in towards the end of the year and really start covering all of these longer term timeframes, monthly, 2-month, 3-month, 6-month, yearly. And I think that should be pretty interesting. And I hope that I can teach you a lot about how this volatility aspect works. This is blue sky territory. Yes, this is the run, but this is not the expansive run. Expansion really gets the real volatility expansion of the run is when you're closing above the upper second and upper third. We could be seeing something different this time around because this is probably going to update aggressively to some of those fib levels that we just talked about, like the bear market fib. This would be very, very interesting to see this at like the 128. And if it were to walk price up and like continue to walk it up, maybe we can start targeting other deeper targets like the 1618 up there at 173. That remains to be seen. There's even intermediate levels above the 128 from more local fib polls and fib extensions and all that stuff that are going to be interesting to watch. And then, of course, those longer term time frame volatility levels of interest. So I'm going to leave you with that. That was a lot of information. I did a lot of talking. My apologies. But that's what these videos are for. I hope you learned something. If you have any questions, go ahead and hit me up in the comments down below. Here on X especially, I try to get to you on YouTube, but YouTube just isn't really a focus. It's just for people who want to watch this on their TVs easily. And yeah, you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. Have a great weekend. With all of that being said, Landy out. Take care.